And just want to make sure you guys can you see my screen? Perfect. All right. So let's get this party started here. All right. So last thing I need to do, I should have done it. Let's make sure I got my little ink to go on here. Perfect. Let's get it rolling. All right. As we all know, I have to go over this disclaimer before we start. So, risk warning and trading disclaimer. Trading foreign exchange on margin carries a high level of risk and may not be suitable for all investors or traders. There are no guarantees of profits, and most forex traders lose money trading. Past performance is not indicative of future results. The high degree of leverage can work against you as well as for you. Before deciding to invest in foreign exchange, you should carefully consider your investment objectives, level of experience, and risk appetite. The possibility exists that you could sustain a loss of some or all of your initial investment, and therefore you should only invest money that you can afford to lose. You should be aware that all the risk associated with foreign exchange trading and seek advice from an independent financial advisor if you have any doubts or uncertainties. This presentation and all of its contents, including past trades and potential trade setups, is for educational and informational purposes only. Using any strategies, techniques, or software mentioned in this presentation is also risky. We make no guarantees of profits of any kind. The presenter is not a licensed financial professional and therefore will not give any financial advice or recommendations. All information in this presentation is our opinion and may not reflect the truth or reality in the world of trading. Please use your own good judgment and seek advice from a qualified consultant before believing, accepting, and acting upon any information in this presentation. This is not a solicitation to invest. Hypothetical performance results have many inherent limitations, some of which are described below. No representation is being made that any account or is likely to achieve profits or lose losses similar to those shown. In fact, there are frequently sharp differences between hypothetical performance results and the actual results subsequently achieved by any particular trading program. One of the limitations of hypothetical performance results is that they are generally prepared with the benefit of hindsight. In addition, hypothetical trading does not involve financial risk, and no hypothetical trading record can completely account for the impact of financial risk in actual trading. For example, the ability to withstand losses or to adhere to a particular trading program in spite of trading losses are material points, which can also adversely affect actual trading results. There are numerous other factors related to the markets in general or to the implementation of a specific trading program which cannot be fully accounted for in the preparation of hypothetical performance results, and all of which can adversely affect actual trading results. Rewards plan disclaimer: your actual commissions and residual income will vary dependent on your work ethic, hours you spend on customer acquisition, and the quality of the customers you refer. Hope you all heard that loud and clear. So that is knocked out. So moving forward, guys, again, I appreciate every single one of you taking time out of your day to hop on this. You got to show up to go up, and you guys showed up here, and that is the first step to, in my opinion, being a successful forex trader. So, like I mentioned in my last video, guys, we're going to go over some examples. We're going to stick solely with the Waveology and how the waves cycle within the indicator, tab 29, fast 33, whichever one that you all use. Other than that, I hope you all had a great weekend. Today is an amazing day for me because we not recording. I appreciate that, Mackenzie. So I am a marketing director for a roofing company here in Tulsa, Oklahoma, and one of the biggest things for our roofing company is the best, getting the best in the world award. We actually we've been two years in business, and last year we got second place. So we got runner up, which is really good. And today we won the best in the world in the Tulsa World magazine. So now we're gonna blast that all over billboards. We're gonna blast that all over social media. I'm their marketing director, so yeah, I appreciate that, guys. So yeah, we've been dealing with a lot of crazy storms here in Oklahoma. I literally had a tornado touch down 3 houses from me, and I don't have a storm shelter. And I'm like, all right, I tell everybody I'm a Marine. I've been shot at, I've been blown up, I jumped out of helicopters. I looked at death in the face, but one thing I absolutely am fearful of is tornadoes. And my wife woke me up at 1:30 in the morning and screaming, "Hey, we got to take cover!" And we looked at. I was watching the weather on my phone, and he was literally saying, take cover now!" And this thing was literally in my entire neighborhood tore down trees. Yeah, I know. I'm gonna build one. They run, I think, like $3,000. There's a good company in Texas that we're gonna check out. So let's go over some charts here, guys. Let me go ahead and pull up some examples that I have for everybody here real quick. Now, these are some trades that I've already posted in the past in our Tab 29 group. It's specific to Tab 29 traders. You might see some of these posts as well within the Scans, Forks, and Fibos group. So today, what we're going to focus on is the Waveology. And, I looked at a couple posts within the past few days of some people, demo trading. And I believe that some people try to make it a little too convoluted. They look at one specific requirement to get into a trade. And then they use that one specific, criteria to enter the trade. And then they try to find reasons to stay in the trade after they got in, or it goes south on them, and with Waveology, it's a confirmation tool. It's not an indicator that tells you when to get into a trade. And it complements all of the other indicators that you use in relation to it, like the INS lines. Of course, wedges. I'm using wedges now. Like Clay for the longest time. Hey, you gotta get on wedges, man. You gotta get on wedges. Of course, Mackenzie goes over pitchforks. So I actually use pitchforks. I use the 62 AMA. Check out Tim Munsinger's sessions on the 62. So what I want to go ahead and show you guys here real quick. We're all pretty much familiar with, for all of you who've been focusing on or paying attention to all the webinars, I use the 62. I use pitchforks, and I of course use wedges now. So this was actually one of my most recent posts that I posted in the group. And I want to go ahead and show you guys this example in regards to Waveology. So this was something I actually was able to find. I actually drew this pitchfork back in time, and I saw how price was interacting within the fork. But what we want to focus on is the waves here. So what I have is I have a 15-minute chart, I have a 5-minute chart, and I have a 1-minute chart. So what I like to do as I focus on the 15, typically what I'll do is I'll keep the 15-minute chart open. And when I see the opportunity for a touch, I see an EMA cross, or when I see price interacting or the wave cycling, is what I'll then transition over to the 5 and then execute on the 1. So just this chart right here as an example. I have a 15, 5, and a 1. And just by looking at this right here, guys, you can see that the 15-minute peak 15 right here, this is a peak 15, is actually cycling the peak 30 upwards. And by doing that, I also saw price touch one of the fib and Ls I had within my pitchfork here. And then I was also able to draw a wedge prior to that. It's just crazy how price was interacting in between this. It's actually created somewhat of an energy point within this pitchfork. So I'm going back to what I was referencing over to some of these other traders. I've seen a lot of traders that are posting trades when the waves are cycling, but they're trading in opposites. I'm not going to pull any of those examples up real quick, but the best way to look at this and how to read Waveology. I open it up here for you guys. This is actually a traditional pitchfork. You can see the touches on the warning lines, and then you can see price interaction with. Now this isn't technically, it's a traditional fork, so this one touch confirmed that it was a valid fork. Appreciate that, Matt. So check it out here. So I believe this might have been a D on a harmonic scan. I should have drawn it on there, but you could see price right here as it's cycling downwards from this potential 30-minute convergence. Now, when you get a 30-minute convergence, when we had the old multi-wave indicator, we would have all the, you want your highest wave to go within the static upper extreme here first. And then you'll see the lower waves start to transition within that, and then you would have a perfect looking harmonic wave convergence. But what we're really trying to focus on here is we don't need to be taking 30-minute harmonic wave convergence trades. You can if you want, especially if you're trading just the harmonic patterns alone. But I kind of reference this as like a hitchhiker. What we want to do is we want to wait for that D to paint, because typically you'll see the D paint, and then price will start to work its way down, or if it's a C that paints and it's working its way down to the D. You're basically hitchhiking along the waves as they start to cycle downward to another harmonic wave convergence on the other side of the static extreme. But from here, you can see that you can't tell that this is an actual harmonic wave convergence. You'd have to transition over to the 30-minute chart, which is why we use these other confirmation tools to get into it. But right here, you want to know, literally in time, you can see here at 1500, you can start seeing that P15 pull out of that static extreme, and it's starting to slowly cycle upwards. Now you can draw trend lines within the indicator if you have fast 33, or yes, that is correct, John. Those are the static extremes here. And then when you're trading clayweight, you'll see Bollinger Bands within the indicator field here as well. One thing I would like everybody to start practicing is trend line touches as well. When it comes to just the Waveology, because typically when you have you want to have a third trend line touch within that wave or within the indicator field, and that now you have high probability odds of price reversing. So what we're looking at right here is we're seeing the P15 slowly start to cycle that P30 upwards. So what does that tell us? Okay, we're looking for a buy opportunity. So what I marked here for you guys was one, I called it a third trend line touch because this kind of broke it, but you can have some breaks within the trend lines as well. It just can't be too too extravagant, all right? So I had a touch here. I already had these touches, but I was waiting for a clayweight trade as well, because all I do is clayweight trades. So just like I mentioned to you guys earlier, awesome, I got these nice touches within my traditional pitchfork. And now, okay, it's time to go ahead and transition. Once I saw this P15 go back down, I'm under the impression that it's going to cycle that 30 back upwards. So one, excuse me guys, I had the wedge drawn. Two, I see that the waves are now cycling the lower waves are now cycling the upper waves. Now it's time to transition over to the 5-minute chart. Hey, what do we see here? We see a P5, that peak 5, touching that Bollinger Band, and now these waves are then cycling that P30 back upwards. So this is a beautiful trade. Yes, 19 pips, I believe. That's what it was. And you can also see, based off that entry, this is why wedges are so powerful, because they help you in regards towards that gravity zone, or they help you with that EMA cross. You might be able to get in before that EMA cross, but we'll get into that here in a second. So Bollinger Band touch, that's my confirmation for a clayweight trade. On top of that, I had a third trendline touch, and I know that that P15 right here is cycling that P30 up. So now what are we waiting for? So you have more high probability odds of your lower wave. So as per my entry criteria, guys, I look for divergence within the P5 or the P1. This is the lowest level wave that you will see. This is why these types of trades, this is why harmonic wave convergence is so pinpoint accurate when it comes to executing some of these trades for you. So I have P1 divergence. I saw a 2-pip pullback after I confirmed I had that Bollinger Band touch. So what I'm waiting for then is I'm waiting for that P5 to then hook upwards. When that P5 hooks upwards, guys, you'll actually see that the same thing happen here with the P1. And what happens from that point forward is then, boom, I have divergence. Divergence helps you indicate that price is now about to reverse, which is why I only take trades that have divergence within the P5 or the P1. That doesn't necessarily mean you have to use that as an entry criteria for yourself. It's just higher probability odds. There's more confirmations there. You're just stacking higher probabilities on top of higher probabilities. Price then moved up, 2-pip pullback. I'm in the trade, and then whatever your form of money management is, mine is using a 40% ESL, or in this case, I waited for a flip within the trend bar, which you see here. So this is just an example to show you how powerful understanding how the waves cycle, in relation to, the EMA crosses, or on top of that, using pitchforks along with wedges as well. Just very, very powerful stuff here, guys. Got some questions. Let me go ahead and look at this real quick. Yeah, that is correct, Matt. Rolling extreme, yes. Um, and John, even though it didn't get to a static extreme, yes, the P5 did go to a static extreme here. Now, one misconception here in regards towards P5, I see some people posting trades where the P5 is touching the Bollinger Bands within the static extreme. That's not necessarily a rolling extreme. You can take the trades, but it's either or, static extreme or rolling. You have more higher probability odds when the P5 is actually touching the Bollinger Bands within the rolling extreme outside of the static extremes. That is correct. This is the hole. Now on my 15-minute chart, this is my 30-minute hole. This is the local hole here on the 5-minute chart, and then on the 1 minute, I have my 5-minute hole as well. Back a couple months ago, I actually had the 30-minute hole stacked on top of here, which you guys are actually going to see here soon on a couple other examples. But again, lay out your charts however you like, whatever it looks, however it looks need fit to you guys, whatever looks best for you. I like to keep my charts clean. If I see price interacting with a specific Fibonacci line or an INS line or any of the EMAs, I like to cancel everything out, move it out of the way. And that way everybody's eyes are focused on that specific price interaction in relation to the waves. I always like to put these little call outs here as well. Other questions real fast. Okay, guys. Sorry, I had to plug my mic in and I got this wireless gaming headset and it got disconnected. So what's the P1 and the P5? Let's go ahead and look at this. I'll go ahead and pull up a live chart for you guys real quick just to kind of show you what that is. So your peak one, which let me go ahead and pull this up here for you guys. I got AUD USD pulled up real quick here. Okay, so your peak one is your P1 is your lowest level wave that and you'll only see this within your 1 minute chart, which is what you're going to use or help you with your execution when it comes to your trades as a confirmation tool. All of your peak indicators you see here on the side where it says peak, they contain 4 indicators, and then your most powerful indicator here is your peak 10 that actually consists of your power 10. That's the only one that's named a power 10, and that actually consists of 12 indicators. And then within your trend bars, each one has a specific amount of indicators as well, hence the name tab 29, tops and bottoms 29. 29 indicators within this indicator field, and what it's helping you look for is tops and bottoms. I hope that makes sense. What are the Bollinger Bands telling us when they squeeze in narrowly on each other? Typically, when you see the Bollinger Bands squeezing in narrowly within each other, that represents some form of consolidation or eastbound movement within price. Price really isn't moving so well, but I'm assuming. Yes, your 15-minute wave right here, that is considered your peak 15, not power. And it only has 4. That is correct. Yes. So let's go ahead and transition over to another example for you guys here. Remember, we're sticking to Waveology here, guys. If you want to get more advanced, after my session, hop on Clay's and he will help you with, trading the Clay away. And of course, I use the 62. You want to make sure you hop on Tim Mutzinger's sessions in regards to that. Let me show you another good example here. Here we go. Fast 33 is actually, that's what I just pulled up for you here, David. It's no different than tab 29. You're only limited to the P5 and the P15. That's on your 5-minute chart and then on your 15-minute chart as well. Same indicator, It just has different limitations. I personally like to have my fast 33 indicator within my 5-minute chart just because it looks cleaner. And then instead of having the green, the green and red here, you get these nice clean bars to help with the confirmation there. So real quick, guys, gonna move forward. I'll go back to the questions here. This is very important. You have higher probability odds when it comes to that 513.62 EMA cross. So looking over here to the left-hand side, I'm looking at the chart and I'm like, okay, 5 crossed first, and then the 13 crossed the 62. Now I'm assuming impulsivity is down. By saying that, I'm now looking at the waves. Let's go look at the Waveology here, guys. Look at where the P30 is. It's riding along that P30. This right here that you guys are seeing, that doesn't mean that's a 30-minute harmonic wave convergence. Too many people are like, oh wow, the P30 hit static extreme and it's a 30-minute convergence. Absolutely not. You have to look at the lower level waves, which is why I told you guys we transitioned from the higher chart down to the lower charts to help confirm that convergence. And typically what you'll see when you get a 30-minute convergence, sometimes if you guys have harmonicpattern.com, you'll see that when that D paints, that's actually coming from a 30-minute convergence. Not all the time, most of the time. So what I'm looking at right here, guys, transitioning from the 30-minute chart over to the 5, okay, 1362 crossed down. So now I'm looking for sell opportunities. So price moved down, it went up and checked the 62 before it rode its way down. Okay, now I'm going to transition my way over to the 5-minute chart. Now what we're looking at is price. Then you can actually see a cross within the local 5-minute chart EMA. Now price went up, interacted with the EMA, and then it worked its way down. My entry criteria was knowing that impulsivity was downward by using the hole. And then look at what the waves are doing here, guys. That 5-minute wave is now cycling that 15-minute, that peak 15 downwards. And guess what we have here? Divergence within the P5. So boom, price interacted with it, entered the trade, clayway, like perfect clayway trade. Now these are the kind of touches I like to see when the Bollinger Bands are within the PZ or on either side of it. Price comes up and just literally taps it, barely breaks it, and then goes down. And then all of a sudden, I didn't have divergence on the P1, but I did have divergence on the P5. Just like I mentioned to you guys earlier, I look for divergence within either or. That is my last final step here. Or, yeah, sorry about that. P1, P5 divergence, entry, boom, price moved. As per my money management, that's when I exited here. So going back to questions real quick. When adding the Bollinger Band on tab 29, to which source do we add it on? Fast 33 shows peak 5, but I cannot find peak 5 on tab 29. Source list. Yes, so let's go ahead and go over here real quick, guys. And I'll move over. Last question before I show this example. Focusing on the waves though, guys. We're focusing on the waves. This is Waveology. Any questions in regards towards indicators outside of the indicator field in regards towards Waveology? We're going to stay out of that. Please make sure you hop on Clay's session today for the intermediate and advanced session. So when you're adding the indicator here, there's a little plus button on the top left-hand corner. When you're adding the Bollinger Bands in tab 29, all you need to do is go into tab 29 or fast 33. Click on your, I'm sorry, there. Drop down, and then you want to go to add indicator onto tab 29. Again, I'll show you. There's a little drop down arrow. Add indicator on tab 29, and then you want to go to Bollinger Bands. Once your Bollinger Bands have been added, it will show right below tab 29. Go to your settings. Tab 29, peak. It's at the very, very bottom. Same thing applies to Fast 33. Okay, Benny, yes. Typically, what I'm looking for, the majority of the time, I'll actually see a 30-minute convergence before I take that clayway trade. I stay away from 30-minute harmonic wave convergences because what you'll notice on a 30, if it's a legitimate 30-minute convergence, like right here, look at this. I can't tell you guys if this is a 30-minute harmonic wave convergence because when you look at the 30-minute chart or the 15-minute chart, what that's then doing is what we call it snaking. Most of the time, you'll see that higher level wave snaking within that upper or lower static extreme. That's not telling you when to get into a trade. It's better to take these clayway trades because then you're, again, hitchhiking along impulsivity flipping. And that's why it's best to have, look, the EMAs, when they cross, boom, hey, let's say hypothetically we got a 30-minute convergence, price is working its way down. We're riding along the way down. And by so, we're waiting for those clayway opportunities. They're all over the place. Clayway, right here. This is your prime clayway. Right here, guys, this is a live chart. Pull this up. Boom. Clayway trade. Not only that, once you guys get into wedges, there's your wedge. Oh my gosh. Clayway trade is the only way, all right? In my opinion, what else is there to learn? Clayway with complementing your pitchfork, complementing those wedge trades. So right there, guys, impulsivity is now downwards. Now sometimes you'll see your lower EMA levels above the 62, and they'll start to gravitate towards your 62 EMA. But we'll get into that, like I said, with Clay and his session in regards to that. We're sticking with the waves, but right here, this is that ideal scenario, like I mentioned to you guys earlier. On Fast 33, this would flash red. Tab 29, you'll see solid red bars. Touch, Bollinger Band, you're in the trade. As per your money management, stick to whatever your money management is. So, moving forward here, let's go ahead and look at another example, guys. Keep the questions coming. This is good stuff. Anytime, Benda. All right, let's see. Aha! Look at this. We're just moving right along. Prime example. See your 513 or above the 62. Not necessarily the ideal scenario for what I trade. However, check out what we have. We have a D on the left-hand side. And we could see that this is a high probability that this was a 30-minute convergence here, guys. But I can't tell you that's what the case is. However, we have the D to help confirm, price is then, impulsivity is then flipping downwards. To help confirm that, I have my holes. Like I told you earlier, I moved this hole from here to here. Same thing. 30-minute hole, local hole on the 5-minute. Price then went up, but guess what? I have my local EMA crossing right here. Price got rejected by the shadow band 21, but look at the waves. The waves are cycling, starting over here. This P5 is cycling that peak 15 downwards to this lower static extreme. Clayway opportunity in the trade. Not only that, how did I execute? I executed based off of divergence from the P1, transitioned over here, price pulled back 2 pips, boom. Beautiful. Yeah, back then when we had the you're correct. I didn't put the D at the highest point, only due to back when we had when harmonicpattern.com came out first, it would paint the D, but it wouldn't shift. And that I apologize. Back then I didn't shift it over here. But yes, good call, good catch. As per money management, it hit my 40% emergency stop loss. So these are profits that are secured. Boom. Look at the waves. See how the waves are cycling. But it's all fractal, guys. They all have Fibonacci in it and Elliott wave, but you don't need to be an Elliottician to understand any of this because you are pattern recognition experts, just like I mentioned on the last session. Let's look here. Again, look at the waves. What are we doing here, guys? The waves are now cycling this. I'm over here on the 15-minute chart. That P15 cycling that P30 down. We are assuming downwards. And the holes are there to help confirm that, even though it's somewhat of a lagging indicator. That's why we have, clayway here. I have divergence. Price then moved downward. Price was interacting with the 78.5 Fibonacci value here, and then price went down. Now this isn't necessarily a clayway trade, just due to the fact that there was divergence, but I had multiple reasons on why I got in the trade. I have the D here. Price is now moving downwards, and I have 3 touches within the upper parallel of the fork. I believe that this was a traditional fork that had drawn, but not a prime clayway trade at all. Divergence is what got me in because I have divergence from the P1 and the P5. But let's go back into more simple examples here, guys. There we go. Now some of you like to have your hole painted on your charts. Like I said, it's trader's choice here. So impulsivity is upwards. Look at what the waves are doing. P15 cycling the P30 upwards. We're waiting for buy opportunities. P5 interacted with that Bollinger Band. There's that hook back I was telling you about. This is fast 33. Green means go. And then bam, we got divergence from the P1. We're in the trade all day long. These are all over the place, guys. I wake up New York. I stay a little bit late for some of the Australian sessions. And they're all over the place as well. So let's go back to some questions here. Is it possible to have harmonic wave convergence just below or above, very close to the extremes? It's negative. Your harmonic wave convergence has to be within the static extreme. There are scenarios where some of the waves will touch. The only exception is if you get a big wick, but you want to stay away from big wicks because that represents impulsivity and indecision within the markets. But you want the waves to go within the static extreme. Thank you, Tim. Any more questions in regards towards Waveology, understanding the waves, how to read them? Let's go ahead and pull up your USD real quick. Based off some of these examples that I'm showing you guys here, it's all robotic. You're learning how to trade, this way. Whatever trader's choice, money management, whatever you want to call it. If you're great at using pitchforks, use your pitchforks, and then use those pitchforks and look at your Waveology in relation to that pitchfork. What's price interacting with? Where are the waves? What are the waves telling you? Look at this, guys. This is a live chart, Euro USD today. Draw your wedges on there, because look what we got. This is perfect. So 513.62 cross, EMA, boom. Price is now moving downwards. All of a sudden, we have a break from this triangle, and now the waves are that the P15 is cycling that P30 downwards. I actually put Bollinger Bands within the P15 just to test it out. You guys don't necessarily have to do it. Stick within the 5-minute chart, trader's choice. Now what I'm doing is I'm knowing that the waves are cycling downwards. So now I'm going to transition over to the 5-minute chart. Static extreme, and price is interacting with the local 62. Boom. Red, downward, price is now moving downwards. So that would have been a great trade right there. 34 pips. If you missed the opportunity right here, hey, stick to your wedge criteria. Could have gotten in right here as well. Stick to late break if you don't know what late break is. Again, save that question for Clay when it comes to Clay Way and his advanced trading strategies as well. So all it really comes down to is knowing where the waves are and what lower waves are cycling these upper level waves are. Oh, you did? Awesome. The reason why the rolling extreme is a higher probability than the static is because typically when you're trading these clayway trades, they're coming from a higher level wave or harmonic wave convergence. So you're still trading, it's because you're trading with impulsivity. Impulsivity is then going to still, it might have a small ABC correction upwards, and then price will then correct itself back. That's where you get those rolling extremes from. How about yes. Okay. So you struggle. I struggle with the Waveology, but I'm struggling with divergence. I understand what it is. It's just difficult for me to see it on my own. Is there a way to build my RAS? Yes, there is a way for you to build your RAS in regards towards divergence when it comes to the waves. What the best thing I would recommend, it takes VOT, guys. It's a volume of trades. You just have to continue to do, ask yourself, how many trades have I done right now? And, how many trade based off of all those trades that I've done, which of those trades has divergence or trend line touches? So practice, guys, just go back in time. Now, some of these waves are calibrated differently. Oh, look at that. There's a triangle right there. Sorry, I got squirrel. What do we call it? I'll just call it squirrel syndrome. Anyway, oh, squirrel. What's crazy is, over a volume of trades, you then become robotic. Practice. Look at the lower waves. Get on the charts and start drawing trend lines within the indicator. Start drawing your trend lines to help identify where divergence is. Right now is not the best time because there's no volume. Ugh, it's nasty. Ain't doing nothing. Hop on early in the morning during New York. Stay away from NFP on Fridays, and hop on there and then start drawing your trend lines along with some of the other indicators that you use. But you'll see it all over the place. Look for divergence within your P1 and then transition over to your clayway trades or your P5. Start drawing them. It's all about a volume of trades. For converting over to a line chart on price helps to see it. That is possible. I don't use the line chart, but hey, if somebody says that works, try it out. It's all about trader's choice, guys. But yes, Mr. Rigsby, it just comes down to a volume of trades. Ask yourself, how many trades have you done? And based off the number of trades that you have done, which of those trades, which of all those trades that you've done actually has you've measured divergence? But don't just go on the charts and go on here and okay, I'm going to look for divergence all over the place. No, stick to what I mentioned. Look at the higher chart. Look at your 30-minute or your 15-minute chart. Draw your pitchfork. Draw your wedges. Look at what the waves are doing, and then if you see a prime opportunity to take a trade station trade or just a chart trade, just draw your lines on here. Make sure you guys are starting to save your lines on here. Templates. This is my ESL. Entry, go, boom, I'm in the trade, entry, draw that on there. Takes a quick second to put that on there. Boom, entry. Put that on the charts, and then once you transition from where the waves are going, you then see that clayway opportunity. Go over here. And then look for divergence within the P1 or the P5. Because step one, you're waiting for that 513.62 EMA cross. Okay, they crossed. I know impulsivity is now downwards. Okay, after that cross, now I'm going to go ahead and look for my clayway opportunity. Is my P5 interacting with a rolling extreme, that Bollinger Band? Okay, yes, it is. Okay, now I'm going to transition over to my P1 and see if I can measure divergence with my P1. That's the best way to do it. Do you want your EMAs to be going the same direction on the 5-minute, 15.5, and the 1? Yes, you want your EMAs to be going in the same direction in regards towards in relation to impulsivity or where price is. So again, make sure you know where the waves are cycling. Let's go ahead and pull up. Oh, that's your USD. Let's go ahead and pull up another one real quick. Let's see if we get a better example. It's just so it's 3 p.m. Central over here, and it's not really much going on in the markets. Let's see what else I got here. I got USD. There we go. No. Let's go ahead and get some of these shadow bands off of here. Right here, guys. Look at this. Damn, 644. You're dedicated, my friend. Look at this. 15-minute P15 is now cycling that peak 30 upwards. We are now assuming impulsivity is up. And guess what? Guys, you have your wedge here. You could have gotten in here, but again, money management, trader's choice. Look at your entry criteria. We're not getting too in depth with that. But if you're a wedge trader, awesome. You're in the trade. If it broke out through here, awesome. No big deal. There's still opportunities within this. If you're looking at the higher level chart, look, there's still opportunities. And there's a whole bunch of clayways within all of this. If you missed it, don't get sad. You know, there's opportunities here because guess what? We're looking at the waves. Boom. That P15 is cycling that P30 upwards. And then all of a sudden, look what we have here. We have a 513.62 cross upwards. Awesome confirmation. I know that impulsivity is now upwards. Now I'm going to transition over to that 5-minute chart. Whoops. Where are we at? Now we're looking for clayways. Boom. That's a clayway trade right there, guys. Clayway. Oh, look at this. This is your prime clayway right here. And guess look where we're at. We're right over here. Clayway trade. That P5 went down to tag that lower Bollinger Band because guess what? We're cycling that up, those upper level waves upward. That 62 EMA cross upwards. So now P5 interacted with the Bollinger Band. All of a sudden, we're in the trade. Based off your money management, hey, 40%, you would have already gotten out, but that's pip secured right there, guys. Yeah, I know, it's absolutely nuts. Demo trade that today. Traditional pitchfork caught it. Yeah, hey, there's a pitchfork on here. Pitchfork, complement it with the wedge. Look at your 62 EMAs. But it starts with looking at the waves, guys. That's where it starts. Don't be trying to take everything you see. Just because you see a D paint on harmonicpattern.com doesn't mean you need to take the trade because you're assuming that that's a 30-minute harmonic wave convergence. There's no need to take a 30-minute harmonic wave convergence when you can write it after you know that D painted or when you know impulsivity is upward based off of the waves in relation to what you're looking at on the charts, price. So start with the waves. And then going back to answer your question earlier here, I'm sorry, I forgot your name, Mr. Rigsby. You know, it starts with the waves first, and then use all these different tools that you have to confirm, you know, where impulsivity is. But what I would like everybody to practice is you can draw trend lines within the indicator field, you know, and then you'll have divergence. That's divergence right there on the P5. You just have to basically program your RES to identify, divergence. Trend lines within the indicator. They're all over the place. But it comes with a volume of trades. Let's look at another example here. There we go. Pitchfork. That is correct, John. Yes. Do you find that there are a higher number of wedges around the 15-minute EMAs crossing? Yes, you'll see. If you're a member of EA Economy, you'll notice that you'll see a lot more crosses happen within a wedge before it breaks out. So yes, it's ideal. in my opinion, to stick with the 15-minute chart, because you'll notice that some of these charts are 30-minute. I might transition that chart alone from the 30 just to see what the upper level waves are doing first. And then I'll go on to the 15, because on Telegram, we get the 15-minute wedge trades, or excuse me, alerts. And then you can draw your wedge in there, and then you can notice, hey, oh my gosh, there's a clayway trade within that wedge. XABC, D, or XABC. But yeah, here we go. We got price interacting, traditional fork. Price went ahead, touched that upper parallel, touched the median set. And this is perfect, guys. Look, what are we doing here? It's cycling downwards. And then on top of that, okay, the waves are telling me that the price is now getting cycled downwards. So we're waiting for sell opportunities. And now we have that 1362 EMA cross. You'll see sometimes, like I said, sometimes when that D paints, that's a 30-minute convergence. And now you're going to focus on writing that level down. Or if you see a C paint, it might make its way towards the D. And then you'll see that that 1362 cross. Pay attention to that 1362 cross based off where you know the waves are cycling each other down. Move to the lower level waves now. I like to draw 5-minute forks. Those are probably, in my opinion, the best to draw. If you're looking for some of these clayway trades in relation to where the waves are at, and then all of a sudden, hey, look, we got divergence on the P5. Look at that. Perfect divergence. Price went up, tagged that median set, worked its way down. And I also have P1 divergence. So going back to that question, look for this. This is the ideal scenario. How do you get wedge alerts on Telegram? If you're an EA Economy member, make sure you go to your back page. Your login to your EA Economy account, and then on the upper left-hand corner, it'll say Trade Compass, and then click on that. It'll then ask you if you'd like to get alerts from Telegram. And if you are not a member of EA Economy, make sure you get with Mr. Steve Greger, and he will get you squared away and started with that. So that's, I know some of this seems like it's a little complex or convoluted here, guys, but it's really not. Like I said, you're pattern recognition experts. If you're just starting with Waveology, focus on the waves and what they're doing. Look at some of the examples, play this video again, and look at what the waves are doing. Look at what those lower level waves are doing and how they're cycling the upper level waves, and then transition to your lower level charts. 30 or 15 to the 5, and then the 1. And then if you're drawing divergence, go ahead and draw them on there. Look at some examples, and then go ahead and practice putting your entry line in there. And then put in your 2 or 3 pip stop loss. And then once it hits 5 pips, the price actually moves 5 pips. I then secure a break even +1, and then I implement my 40% ESL. But that's more advanced. We'll get in, like I said, it's trader's choice. That's your power zone. That's just a measurement tool that we used back in the multi-wave days. That's what the PZ is here. You see this? But it really has not too much of a relevance right now. What we really focus on is the Bollinger Bands and the lower and upper static extremes. Absolutely, Joe. Can you mark with a white line where EMA cross over the 15.5 and the 1-minute chart? Okay. The best, this is already pre-screened. This is already an actual picture, but let me go ahead and mark it for you real quick. White. That's your cross right there. What you'll see most of the time is that 5 cross first. The 5 will always cross that local 62 EMA. The blue is your 30-minute local. I always keep my 30-minute EMA on all my charts. So make sure you go into your tools and keep that 30-minute on there if you want to. 5 crosses first, and then you'll see the 13 cross. Once those two paint, after that candle paints, past that, the impulsivity is now downwards, and price will sometimes, maybe most of the times, come up and retag that 62. But make sure you go on Tim Mutzinger sessions to get more info or insight on the EMAs. But yeah, that's where it's at right there. And then transitioning over to the 5-minute chart, I wish I had it here, but then you'll see the local EMA cross. It was more so up here. Local EMA cross, boom. Impulsivity is now downwards. And you'll get the crosses. You'll see stick with the higher level charts. You'll get the cross here first. And then you look at the 5-minute chart, you'll get that cross, and you'll also get the cross here on your 1-minute chart. But stick to the waveology and know what the waves are doing. Don't be the trader that goes on your 5-minute chart and you just see a Bollinger Band touch from your P5 and you didn't take the first step to see where the waves are getting cycled. That's incompetence. Let's focus on what the waves are doing first so we know where impulsivity's at. There are a higher number of wedges. How do I get what? Okay, boom. Can you mark it? Okay. What are clayways? Do I need tab 29? Okay, if you don't know what clayway is, guys, that's fine. You can stick with these sessions in Waveology, but in order to understand Waveology and clayway, you have to have tab 29 and fast 33. If you don't have tab 29 or fast 33, please get with Mr. Steve Greger. Send him an email. That information is available to you within the Scans, Forks, Fibos, and Waveology group, and his information is provided for you in there. Click on one of the tabs. I recommend sending him an email. If you don't know where the email is, that should be provided there for you. If that's not there, it's also on, I believe, on his videos. Send him a message on Messenger. But he's a very busy man. I know he gets a lot of messages every day, but one thing I like about Steve is he just takes time out of his day to message everybody. It's crazy. But that is it for today's session, guys. Yes, Betty, yes it is. I believe there is a trial session for that. So that is our session, guys. That is us going over Waveology. I appreciate every single one of you hopping on. Stick to the waves. Know what the waves are doing. Then move to your pitchfork that you drew previously. Then look for those wedges. Look at those wedge alerts. Transition from those higher level charts down to the lower ones, and then you could begin execution. If you don't know what divergence is or you haven't practiced divergence, practice it. It takes a volume of trades. So other than that, let me go back to this screen. I got some room for maybe a couple other, maybe one or two more questions. I have to put up the disclaimer so I don't get in trouble. There we go. Oh, it always does this. I don't know why. I gotta swap these guys. There we go. That's the disclaimer. I already read it, but I'm gonna post it up again here for you guys. Yeah, post your trades, guys. And if you're in my session or any of the other coaches' sessions, and you're not in Scans, Forks, and Fibos and Waveology, you're not posting any of your practice trades, your demo trades, that's a problem. We're not going to interact or help you if you're not practicing. You need to be comfortable with being uncomfortable. A lot of people, the first step is just posting those trades. You could practice all day long. Post the trades that went south on you, that didn't work. That way we can help identify what it was that didn't work for you. That way you can learn what not to do. So make sure you're, be comfortable with being uncomfortable, guys, because that's the first step. That's one of the keys to success. If you wake up every day knowing that you're going to do something that you're not familiar with, you're walking into the abyss, you're walking towards the light, and then that's going to help guide you towards your goals and your dreams. So do we post the trades in Scans, Forks, Fibos? Yes, you do. Post them in the Scans, Forks, and Fibos group. If you're working with Waveology and you're posting trades in regards towards any kind of pitchfork, any kind of wedge trades, anything in regards towards Waveology, yeah, post it. If you're a member of Tab 29 or the Pip Club group, you can post them in all the groups. It's just, like I said, it's trader's choice. But you'll get a lot more insight if you post them in the Scans, Forks, and Fibos group. If you're a member of Tab 29, I would say you need to stick to your post requirements still within the Tab 29 group, because it comes down to a volume of trades. Stick to that level of discipline and post them in both groups. I preach what I practice, and if I have something I need to post in the Tab 29 group and it's in regards towards a pitchfork trade or a clayway trade, I'm going to post them in the Scans, Forks, Fibos, and Waveology group now. So yeah, of course, Marvin, no problem. But other than that, I'm really excited for next week. We're going to continue going over this. I'm going to show you guys some more up-to-date examples. I'm going to look for every single one of you and your posts. I'm going to have some questions ready for you guys, and be ready to answer them. Bring your notepad. Make sure you guys are keeping a trade journal for some of the trades that you're demoing. It all comes down to that level of discipline. And if you have a trade that goes south and you thought you took the perfect, trade that that had that divergence, or that was a wedge, or you read the waves wrong, post it in the group. And if you don't get a response from a coach, tag one of the coaches on your post within a 24-hour period. So don't do it instantly once you guys post it in the group. All right. But yeah, that's it, guys. Perfect. Good. If you guys want to know what tab 29 is, last thing, if you want to get access to tab 29, please email Mr. Steve Greger. And in my personal opinion, it is the indicator of all indicators, one of the best confirmation tools on the planet. So, yeah. Other than that, any last questions? Nope. Okay. Here's the trading disclaimer. I will catch you all next week. I always like to tell everybody, money comes and goes, but the one thing you'll never get back is time. So take that time, spend it with the loved ones, all the people that you care about. I appreciate you guys for taking the time to hop on here, and I will catch you next week.